Hello everyone, welcome to Professor 24/7. My name is Niharika Varya Bhatnagar and I'm with you with the specific area of accounting and financial management for bankers, and today we are here for the chapter of financial statements of companies. Okay everyone, so I hope I am audible as well as clearly visible. Okay, so what's going to be the topic that we're going to talk about? It's simple that today we're going to talk about the specific area of exclusively companies only. How does their books of accounts exactly looks like is the key component of today. So when we talk about this specific area altogether, so this is the particular topic, financial statements of exclusively the companies. We're not going to talk about the normal organizations, but only the organizations which are companies. Okay, I hope this particular session is clearly visible to you, and everyone, I hope you have already availed our courses in terms of the working there. I hope you have already seen that the sale was going on and there was a big takeaway for that. Giveaway was there, so that was up to 1.5 lakhs, which is a huge amount, of course. So if you're looking forward towards our courses, then hurry up and just check it out. We are bringing up new and new things every single day, and I hope you are reviewing all those things and looking forward to it in the same manner. Okay everyone, let's look at the particular topic today. I'm going to talk about the formats of each and every organization today. With exclusively the company there. When we talk about this part, everyone, first of all, please share the session. Number one, like the session. Number two, and share it among your peers, because this brings up the I would say the motivation of all the people who are working in this particular area in the JAIIB CAIIB English Medium. Everything is being given to you so that you can actually learn a lot from this specific area. So I hope you have already started reviewing our courses. Acha, chaliye. Now let's begin with our session, everyone. When we talk about the financial statements of companies, what do you mean by that? Financial statements of a company means what is the net worth of the organization, what is the performance of the organization, both. When we talk about the net worth, it is the balance sheet. It talks about the net worth of an organization, while when we talk about profit and loss account, it shows the performance, the financial performance of an organization, whether they are doing good, whether they are not doing good. All those things are being studied with the area of the financial performance, which is in the area of statement of profit and loss account, and one is the balance sheet. When we talk about balance sheet, that balance sheet is talking about the net worth of a person, whether the organization is going good or is it going bad. All those things have to be studied. So when we talk about an organization, people are gonna judge it whether the organization is performing well or not, and if it's not performing well, then that's not good. And how do we find out if it's performing well, or in this case I would say that how do we know that the organization is making good money, right? So you study all these things through the financial statements of a company. So when we talk about the financial statements of a company, that is this. Okay everyone, I hope this is all clear. When you talk about the objectives of the financial statements, what are the objectives? Number one is the earning capacity. The earning capacity of an organization is studied through this. If I ask you how much money do you earn, so you'll be like, okay, just look at the balance sheet and the financial statements of the organization. That means look at my profit and loss account. Have you seen how much money do I make? And that is where you come to know about the entire area. That is earning capacity. Second part is cash flows. Cash flows is basically the money that you earn with the inflow and outflow of exclusively the cash. Basically na, these are derived statements. Cash flow is a derived financial statement from the balance sheet. Basically what do? You'll prepare your financial statements and then you analyze it. The analytical part of an organization in terms of the working there is the cash flows. Everyone, I hope this particular session is being helpful for you. If it is, then please share the session, like the session. Also subscribe to our channel if you haven't done it yet. Okay. Chaliye then. Now let's move on to the next point. Okay, it's going fine. Chaliye, when we talk about the management effectiveness, that's one of the other parts. That means, when the organization is making money, the management is also looking forward towards more chunk of funds. for them, and if they are not making money, then management is the one which is answerable. Matlab, whether you are doing good or bad, whether you're making money or not making money, all those questions are answered only when you are looking at the financial statements of an organization. So when we talk about this area, earning capacity, cash flows, management effectiveness, all these things are available to us, or we study all these things through the financial statements. Okay, so that's the entire area. This is the format for the specific area of the balance sheet, and I hope this is visible to you. Chaliye, let's just show it to you. Just a moment. I think let's just remove the ticker for the moment. I hope this is visible right now, everyone. This is a specific area of the balance sheet format. I'll just explain each and everything. This is important in order to understand the specific areas of, see, if I tell you, this is cat, rat. How do we know this is cat and this is rat? Basically, we study the alphabets. That is why we understand the entire word, isn't it? The same process is there in terms of the financial statements of a company. So I'm going to focus upon what are these particular things, and I'll explain all these things in detail there. See, everyone, look at this particular format. Number one is equity and liabilities. First is where do you arrange your funds from? That is your equity and liabilities. That includes your shareholder funds. Shareholder funds matlab the money which the equity is bringing or the shareholder is bringing into the organization. That includes their share capital and the reserves and surplus. The money that you brought into the business is your share capital, and the profit that you earn. Of course, the entire amount is not given as dividend to the shareholders. A part of it stays in the business in the form of profits. The portion which stays in the business in the form of profits, it goes into the area of surplus when it is free, when there is no restriction on it. But if you keep it in the name of a certain amount as savings, then it's called reserves, right? I'm sorry. So there are two aspects that we are learning today. In terms of equity shareholders, either we have reserves or either we'll have surplus. Money received against the share warrants. Then what do you mean by share warrants? Everyone, when we talk about shares, there is a certain thing. If at this point of time, I promise you to give you shares in the upcoming future, they are called share warrants. Why share warrants? I am assuring you, I cannot give you shares right now, but you have the right to receive share in the upcoming future. When you have that right in the upcoming future, then it's called the share warrants. Next point is share application pending allotment. Now the entire amount of shares are yet to be allotted. Now when the entire amount is not allotted yet, we'll be allotting them in the upcoming future now. So we'll go for share application money pending allotment. That means the share would be allotted soon. They haven't been allotted yet, but yes, they will be allotted soon. Next point is non-current liabilities. Long-term borrowings. Acha, non-current liabilities and current liabilities. What do you mean by these? Equity is the money which is the soul of the organization. If this money is gone, that means the organization is dead. Then what's the next part? Okay, the next part says current liabilities and non-current. Current means anything which would be payable within a span of next 1 year. 1 year or one operating cycle. 1 year or one operating cycle. That means if you are going to pay off a certain amount of burdens or the liabilities within 1 year or one operating cycle, whichever is longer, is basically something which we define as current liabilities. Everyone, I have to pay salaries. Salaries have to be paid within the next 1 month even. People will not wait for 1 year to be paid by their salaries. That employee will run away, right? So when the liabilities are to be paid off within a span of more than 1 year or one operating cycle, then it is non-current liabilities. And if it has to be paid within 1 year or from your production to your sale, the entire operating cycle, within that period, then it's called current liabilities. More or less, this is long term and this is short term. Then when we talk about the long term, these are the ABCDs. Number 1 is long term borrowings, the borrowings which are yet to be paid in future, but in the longer term. Matlab, I've taken the loan which is for more than 1 year, car loans, then personal loans which are for buying an asset, right? When you are buying a particular land for your organization, then you will have to pay the certain amounts, and that is to be considered here. Then deferred tax liabilities. Deferred tax is basically liabilities or assets are created because when we talk about the Companies Act and the Income Tax Act, both compute their balance sheet differently, both compute their taxation differently. When you have further more taxes to pay, then it's a deferred tax liability because you'll be paying more tax in upcoming future. It's deferred tax liabilities. Less tax in future, it's deferred tax assets. Then anything which doesn't fit anywhere above, then it's called other long-term liabilities. Last is long-term provisions. Provisions means the amount that we'll have to pay in future, as we need to keep the money aside for it. For example, PF. We haven't paid the provident fund yet, but we'll have to pay the provident fund to all those people who will be leaving the organization, right? So that would be considered here. After this, we have the current liabilities. Current liabilities means all those liabilities which are yet to be paid by the organization in the next 1 year. How do we define the next 1 year, everyone? It can be defined as the year in which, the people are not going to wait for more than 1 year. For example, taxation. You tell income tax department, I'll pay the tax tomorrow. They'll be happy. Tell them, yeah, I'll be paying in the next year. They will raise questions against you. Right? So that's a questionable part. It has to be short term. That means you have to pay within 1 year. वैसे income tax department doesn't even wait for 1 year, to be very honest there, right? Then when we talk about the current liabilities, current means anything which you are supposed to pay within 1 year or one operating cycle, where we can say short-term borrowings. If I've taken a loan, then I'll be paying it back within 1 year. Trade payables, for example, my creditor plus bills payable, the amount I'm yet to pay. They are to be considered here. Then come the other current liabilities, the liabilities which we are yet to pay. We haven't paid them yet, but we'll be paying them in the upcoming future. Done then? Then what next is there, everyone? Last is short-term provisions. Short-term provisions includes our provision for taxation. This is the only part which includes the liability part. Once the liabilities are all done, then we'll talk about assets. Everything that we build in our business is either my own money or I'll borrow it from somewhere, right? But when I spend the money, where I'm going to spend the money? I'm going to build up an asset, everyone. When you total this up, this will turn out to be your liability side. And then we talk about our asset side. Now, I hope this is visible clearly. Okay. Assets are basically of two types. One is long term and one is short term. Long term and short term. How do we define this part? The long-term assets are those assets in which we are going to have them for more than 1 year. It includes various things. Number one, tangible as well as intangibles. Tangible means the ones which can be touched, which cannot be touched are called intangibles. Tangible includes machinery, land, building, and etc. There are many things which are going to be there. Then we talk about intangibles. This includes trademark, copyright, copyright. Then we have patents, goodwill. They are all a part of this, right? See, if I am building a specific factory, it's not done yet. That means this asset is not ready yet. I cannot call it an asset and charge depreciation on it. Till the time the asset is not ready, how can I charge depreciation? So where will you put it? It's a tangible asset, then you have to charge depreciation. So you'll put it in the capital work in progress. That means the asset is not ready yet. Then comes intangible assets under development. When we have an asset, but we have applied for it. For example, if I apply a patent, then it is gonna take some time to get that patent done. And patent registration takes time, so it can come there. Next point, non-current investments. The investments which are basically for more than 1 year. I've invested in your company, I've invested in shares, I've invested in any other random thing, which is for more than 1 year. It is to be considered here, right? Next part is deferred tax assets. I hope you remember this part, everyone. When we talk about deferred tax asset, means when we have a fight between the current assets and the current liabilities, and who wins? Sorry, in this case, Companies Act fights with Income Tax Act. This is Companies Act 2013. This is Income Tax Act 1961. When you have to pay less tax tomorrow, that means you have got a benefit which is going for the future. That is why it's called deferred tax asset. That means in future I have to give for the asset, and this is where I'm going to record it. Then comes, see, this is something which relieves me for the future. That chali, I have money for the future, that is to be considered here. Done. Next part is long-term loans and advances. Long-term loans and advances means the advances that is to be paid in the upcoming future to us. Loans and advances, matlab we have given money to someone else and we're going to take it back from them. It is to be considered here. Next is other non-current assets. The assets which are to be classified here because it's a long-term thing but doesn't fit anywhere in the above. Next is current assets. The assets that we possess in the business for short term. That means for less than 1 year. Current investments, I'll sell it off within the period of 1 year, so it's called current investments. Inventories means our stock. That means the fixed goods, finished goods, raw material as well as work in progress. Then we have inventories. Inventories is basically stock, है ना? Finished goods, WIP, as well as raw material. Trade receivables means any money that we are yet to receive in our future, and make sure this is something that we'll receive within a span of 1 year. That means this includes my debtors plus bills receivable. Cash and cash equivalents means any money that I'm going to be having in my business for short term or long term. Short term, cash and bank balance. We have this thing in the business now, so it's gonna be here. Next part is short term loans and advances, the loans that we take in the business for a shorter period. That means we have given these loans to someone, and once they'll be paying off, then we will be relieved. Right? That is something that we will be covering in this specific area. Chaliye then. When we talk about this specific area, this is the last one where nothing is classified. It goes into the area of other current assets. That's where we are going to put this portion inside, and that is how we are done with it. Chaliye. Now comes the next part, that is called profit and loss account. So profit and loss account looks like this. There's a lot of things. This is the next statement. So this is part 2, and this is when we talk about a profit and loss account. Now profit and loss account is actually a nominal account which notes down the profit or the loss of an organization. That means it records profit and loss of the organization. Do we really get questions directly from this area? Very less we get the questions, but is it important? Yes, it is, because this will help you to understand the topics altogether. Otherwise, it becomes very, very difficult to understand the specific area. Na? Why am I saying that? Because when you're trying to understand the specific areas of these topics, na, then it becomes troublesome. Because this helps you to understand what are the financial statements of an organization. Once you understand how does the financial statements of an organization looks like, then it becomes clearer, right? Chaliye then, let's look at the specific area altogether, everyone. First of all, when we talk about the profit and loss account, there are two important things. One is your income and one is your expenses. Income and expenses can be defined here in a certain way. What do we put in this specific area altogether, everyone? What do we put? First of all the incomes are basically of two types, the main income and the allied income. Main income for a business is the sales that they make. Allied income means the income that is basically extra that they are getting. You know, this is not the main income. This is an allied income which they are getting. So then comes the next part, that is your expenses. Expenses means any expense that you are doing for your business to earn money. They are considered here. This is for one particular year. So when we talk about this area, revenue plus other income, this is your total income. Total income. When we talk about expenses, cost of material consumed, purchase of stock in trade, this is your stock based work. Or then we have changes in inventory of your finished goods, work in progress. This is your opening stock minus closing stock. So what's the difference between cost of material consumed and stock in trade, everyone? Material consumed means we already had some stock, then we bought more, and then whatever we are left with is closing stock. For example, we had 10 units, we bought 20 more, we should have 30 right now, but we were left with only 4. That means 26 units were consumed. This is for raw material, because we purchase raw material. We don't buy work in progress. Half done work is something that we don't buy. So in this case, what is it that we are going to do? In this case, this is consumption of your raw material. Then the next part is when we talk about our finished goods, and we talk about our WIP. We have opening and then we have closing. We do not have something that we purchase, isn't it? Chaliye then. Next part is our employee benefit expenses. Employee benefit expenses means those expenses that we are incurring in order to keep our employees in the business, because it is important that they are paid off. When they are not paid off, it is such a troublesome thing, right? Done? First of all, then we have our financial expenses, interest expenses that we pay is covered in this specific area. And interest expenses, bank charges, then any of these money that we are supposed to pay. Then we are looking forward towards the finance costs. Finance cost means any expenses that you are supposed to pay in order to get more finances for your business. Acha, next part is your other expenses. What do you mean by other expenses? Any allied expense which do not get part of it. Then this is what we are looking forward to. Okay, then comes total expenses. Once you have got total expenses, what do? Income minus expenses. That will give you the profit or the loss of the organization. If it's positive, it is profit. If it is negative, it's a loss. And that is how the simplest way of working this specific area is done. Done, everyone? That is how the balance sheet of an organization works. Okay, everyone, so this is how the balance sheet and the P&L of any organization looks like. So why is it important to understand? Because based upon this, we'll be understanding the financial statements of the organization. That includes ratio analysis, and also the financial statements in the detailed manner can be understood in this area. Done? Chaliye. Okay, everyone. Once we are done with the balance sheet, then we are done with the P&L. Then what is it that we need to understand next? Let's understand the next part, everyone. That is, what do you mean by extraordinary items? Do you know there's something called extraordinary items as well? See, something which doesn't happen in the business on a daily basis. For example, fire, earthquake, natural disasters are not new to us, but they are different to us. When they create a problem, when they create a loss, or when they create a profit, this is exceptional for us. So natural disasters, whenever losses or profits, abnormal profits or losses occur due to these, this has to be specified separately. Dekhiye, we face an extraordinary thing. That is why we are getting it. So the fires, early debt repayments, they're all a part of it. But then there is something called exceptional items as well. Do I sell my property every single day? No, we don't. Selling of the property doesn't happen every single day. That means if you make money, extra money, you made 20 lakhs extra, those 20 lakhs extra is not because you are having good money in your business. It's because you just sold an asset and earned money. So there's a slight difference between extraordinary items and exceptional items. So that's one particular important area to understand in terms of the business. Acha, this is the exceptional items, everyone. Exceptional means something which doesn't happen on a daily basis. Number one is restructuring cost. When you change your organization structure, then obviously you get some money. Then comes the next part, that is impairment charges. Impairment charges matlab our business has got some permanent decline. Acha, everyone, I had this specific machinery. It could produce 20,000 units in a day, but because of one spare part gone down, it has come down to 16,000 units per day, and this is permanent. When there's a permanent decline in the capacity because of one particular component, this is impairment. Okay? Then legal settlements, you just don't expect that someone will sue you and they will win. Hai na? Done? Okay, now comes the working capital. Everyone, what do you mean by the term working capital? When I try to define the term working capital means the capital that you are using in your business on a daily basis. Everyone, what do you mean by working capital? Working capital means the capital that you have in the business as current assets minus current liabilities. The money that you need in the business are called current assets and current liabilities. How do we define the current assets and current liabilities? Current assets and current liabilities can be defined as something which you need in one specific year. So all that money that you need in the business to run the business, it's called working capital. ठीक है, the formula is CA minus CL. Higher working capital means you use a lot of money to run your business on a daily basis. So this normally means that your profit is going to be lesser. If not a lot of money is required to run your business and you earn more, then this is where you have a lot of profit. So that's a good point now for the business. Acha, last part is the capital, everyone. Capital means the owner's funds that we are having in the business. So owner funds are called capital. How do we find it? If you have your total assets, the money that you have invested in the business, no matter how, your money or someone else's money, minus only the liability of the outsiders, not the liabilities of the people who are shareholders. So outsiders liability means banks money, the XYZ people who have been given us loans, all those things are to be considered here. From the total money, outsiders money is gone, then what you're left is the insider. For example, I bought my laptop for 10 lakh rupees, say these are my equipments that I bought for 10 lakh rupees, out of which I took a loan for 6 lakhs. So that means out of 10 lakh, if 6 lakh was through loans, then of course 4 lakh was my own funds. They are called capital. Then everyone, that is how we understand the specific topic of the specific area, which is called the financial statements of an organization. Are these really important? Indeed, these are very, very important for any organization, because when we talk about these specific terminologies, these terminologies are super important for any organization. Acha, one more thing. When we talk about assets and liabilities, how do they look like? The total of assets should be equal to total of liabilities at all times. This cannot be a different thing, because everyone, if I have 10 rupees in my pocket, then I can spend only 10 rupees in my business. If I increase it, then I can spend more. If I'll decrease it, I'll have to spend less. Those things are definitely there. So that is how we define this specific area altogether, everyone. Okay? Then that is how we define the balance sheet of an organization along with P&L. Everyone, what was P&L? Profit and loss account. Profit and loss account is basically a nominal account which talks about what is the profit of an organization and the loss of an organization. How do we use it, everyone? P&L can be defined as something which helps to understand the financial performance of the organization. Through the financial performance, how do we work? Financial performance helps us to understand whether I should give loan to you or not. Everyone, hardcore reality. Someone who has more money. Okay? Someone who has more money gets loan easily. Why? Because he can pay back. Someone who cannot pay back will never get a loan. Someone who has money can pay back money at any point of time, then we don't have a problem with that. So that's very, very important area. If you can pay back, you get the money very easily. If you cannot pay back, you won't get the money, because you cannot give the money back to the person who has given you money. So in this case, weird part is money attracts more money. If you have money, you can take loans easily. If you do not have money, then getting loans is definitely a difficult and a tedious task for you. That is how we understand this entire topic of P&L, then balance sheet, and then we are talking about the basic terminologies. I hope this particular topic is clear to you. And when we talk about this specific topic, don't forget, everyone, we're not only understanding the financial statements of the organization, but this becomes the base for other topics. Done, everyone? Chaliye. So let's talk about what have we brought for you, everyone. I hope you have already reviewed our courses. If you haven't, then let me show you what are you missing right now. Acha, look at this, everyone. Go to this website, www.adda247.com. Look at this part, everyone. This is www.adda247.com. Once you go on to the specific area, go on to the area of JAIIB and CAIIB, go on to the area of JAIIB October 2024. In this case, what you will get? You will get this JAIIB increment batch. This increment batch is here, everyone. It's starting from this started on 8th of August. What you need to do is click on the area of buy now. Use the code. Just a moment. Use the code Y541 and apply it, and you can get for 3799.81. So I think this is a good thing to look forward to. 81% discount is going on. It's ending soon. So I think you can expect by 12 by midnight actually today this particular option is gonna end. So this is the perfect time. You should definitely buy the particular courses at a cheaper price, and definitely you should go for it. Now, every money saved is gonna be beneficial for you because you can use it in somewhere else, and I think this is good enough for you. When we talk about this particular batch, what are you getting? Let's talk about that part as well. Now, you get live classes. In this case, you also get the recordings of it. You get test series, the ultimate test series in terms of all the 4 subjects, unit wise as well as complete, are also available. Ebooks are there. That means the Macmillan Go books in terms of their gist are available for you. That means you don't have to go and open the book. The examples, the questions, and everything else in a summarized form is available in the form of ebooks, chapter wise. So all these faculties are there. We are all in this particular area from quite a long time. The experience that we have seen over the period of time in terms of the examination is definitely something you should rely upon and go for it. So everyone, that's it for the day. I hope this particular session was beneficial for you. If it was, don't forget to like it, share it, and subscribe to our channel right away, and keep this particular topic in your mind, because this will help you to understand the financial statements of a company in a deeper manner. So that's it for the day, everyone. Thank you so much for being there, and everyone, good night, and we'll be meeting in the next session. Thank you. Bye bye.